Going to give you a basics on how I use the Fibonacci retracement, why I use it in the way I do. There's a lot of different ways to use it, but the biggest one for me is to target what's called the golden zone, which is between the 0.5 and the 0.618. So 50 and 62% basically is the way to look at that. If you click on it, you can see that there's a ton of different stuff in here, all the different fib retracement levels. And for myself personally, I will basically, only use 0, 1, 0.5, 0.618. I draw it with the trend. There's a lot of different ways to use it. This is the NASDAQ, which, as you guys probably know, if you trade pretty frequently, it collapsed today or over the last couple days. And going into the week, we were all on Zoom, and we basically had a markup, that was about maybe why the continuation of that would happen. So if you can imagine this all the way to the right, not here, okay? We were in the golden zone when we were looking at, basically marking this up. So first things first, I wanted to do to use this fib retracement tool when I'm looking for potential reversals or buys or whatever. Just to give you guys a heads up, these are key levels of price that I had put in for the buy on the way up. We did catch some of the sell on the way down, and it hit our key levels basically is what we were looking for. So we took our entry here, and we ended up take profiting in this area right here, which is like a quick scalp. Anywho, so the way I'm using the fib on this specific setup, right, is pretty straightforward. So we have a break in structure, right? So the way I use the fib is I draw it from the beginning of that break. Okay, so we have our break in structure, slight retest candle, wick, and a drop. Okay, so the way I do it is I'm basically drawing my fib from the top of that wick to the bottom of the very next wick to sort of get an idea of what this breakout move actually was right here. As you can see, the golden zone in that breakout is right in that key level that we've been looking at for a lot of different trades in the past, and all the way even back into here too. You can call it an order block, you can call it whatever you want, but that level in here, really important one to know. So we have our, the beginning of our next retracement potentially of the trend. Okay, so it comes up to test our SMAs, fails to test that, right? Drops down, doesn't create a lower low, but based on the trend line that I had marked up on the daily, for the first time in a long time, this came down a break. The trend came back down again, and here's a situation where you think a head and shoulders pattern could happen because in the past, that's what we've always seen, right? But what happened is, it came up, broke down below here, came back up, and got stuck in our fib retracement zone. This was the perfect spot for the entry for this big move down. Obviously catching it up here is great, but we have the massive breakout, right? Even breaks out everything up here, breaks our trend, retest, fails to break the test here. This is probably the most optimal entry based on the confirmations that I use to get in after this, because obviously we know we have the breakout, coming down. This is the retest. 9 out of 10 times, if it's a real move, it will always break out, retest, continuation of the move. So that would have been the optimal entry here, was the rejection off of our 50 SMA. So just to give you guys a heads up on those, 200 is the gold, 50 is the red, 21 is the green, blue. So that all happens. We have some consolidation in here. It doesn't rally. We don't have expansion out of the golden zone, so we have a rejection. Another spot that we were looking at for entries. Comes back down. And then we have basically a single day move in which it just drops and then, makes an attempt to rally. So top of that move, right here, bottom of this move right here. This is basically a full day worth of candles, almost like a full trading day. 1, 2, 3, 4, 5, 6, 7. It's pretty damn close, right? That's 21 hours right there. So that's our full day that we're looking at. Top of the trend, bottom of the trend, 24-hour period of trades. I was sleeping during this. I woke up, I think, just for this part right here. But so same thing here, guys. Pulling the fib from the top of our trend here. Basically the top of this move here to the bottom of this move in our 1 day period. we have found that it pushed up, rejected up here, came down, and held in the golden zone. Boom, next candle down, huge opportunity for a sell. So that's the second or third entry right here. That would have been really good. So our first really good entry is up here. Our second one would have been in the golden zone on the rejection. And then once that trend's been rejected, we have basically the retest right in here, right? This is why we're pulling our fib for the retest. And then we have the continuation of the move. So obviously taking a small lot and swinging it from here all the way down would have been ideal, or catching the scalp that's currently happening here. There will be, of course, some sort of retracement up. My estimation is that we'll get up into this sort of level here and then see it drop back down. But that's how I use the fibs on NASDAQ, or how I used it to basically take a look at this setup here. And then I'll show you guys as well on, let's see if I got a good one here. Yeah, on USD JPY. Okay. So this is a trade that we've been in for a bit. We pretty much, we're looking at the total expansion here from the bottom of the move to the top, giving us some ideas of key levels of price. Of course, I'm doing all this on the 4-hour, by the way, guys. So that's one thing you have to realize, is if you're taking trades on the 4 hours, you got to be patient. Okay, so basically we have our break of structure, our retest, and then the continuation of the move. Okay, retests, fails to break out, retests here again. This is when the sell is 100% confirmed from here on out. We pull our fib from there to there, and I took this position purely based on the fact that it didn't rally. We failed, we rejected up here, and I saw that it was rejecting on my SMAs, and I got in. Second position, which was also sent out, is right here. And reason being is because it did pretty much exactly what I expected it to. I was looking for a big drop in the move, and then for something to sort of basically come up and, you know, touch our golden zone and come back down. So as you can see, I pull it up to here where the, test failed. And we have all the way down, I'm just pulling it from here to here, right? Because now I know we have a rejection happening and a retracement, okay? Once that retracement candle is up and on, I know I could be pretty good in a situation to pull out the fib retracement, do our trend, and see where that kind of goes, right? So, boom, rejects really, really nicely off of our 61 and back into the sell. This is the secondary position we took here, and we're good to go. So you can really utilize it based on these big sort of 4-hour pushes, in other directions, and just understand that you're looking for pullbacks in order to take entries. So this, of course, is a good buy. If you catch that buy right there, it's a handful of pips. It's a good 50, 60, 70 pips. But what we're really looking for is we have bias that this is a sell because of all the action that's happened here. Okay, came down in here, rejected up into our fib. We see it on our fib here, and we're out. We're taking that sell all the way down. Obviously, I've had bias on the trade already too, so that's another thing to take into consideration. I already have heavy sell bias on USD JPY. I had it based on NFP. I had it based on the FMOC information that just basically happened a few weeks ago, and I have some pretty heavy fundamentals based on the US dollar right now, with a lot of COVID things that are going on, and the level of inflation and interest rates, all that kind of stuff. So my long-term bias on USD is to see it really drop down quite a bit and return to, potentially some previous levels. Like we could see it, there is potential if we break this spot right here, we could see it drop all the way back down to 109, which would be amazing to hold. But that's kind of how I use the fibs in those situations. So like I said, the big thing to understand is we have break in structure, retest, break. When you see the retest happen and it breaks back down, it rejects our retest, it breaks down, and then there's a retrace starting, okay? You want to pull your fib from the top of the break to the bottom of that move. That's your single day here, or 2-day, whatever it might be, right? Single day move, full 24-hour move in there. And then we have a retracement the next day. And our bias on this isn't to look for buys at all in this zone. Okay, we're either gonna, we're looking for sells for the continuation of the downward move, or because we most likely took some partial profits down in this area because there's a pretty key level of orders here, right? Big order block in this whole area right here. Took some partials here, majority partials. We're looking to see that if this comes up and breaks above then we're cutting the trade because it's out, right? So we take 75% on the way down here. We have 25% left. We're letting that go. You know, we're losing some money on that trade, but it's okay. Boom, hits and rejects. We take out another position right here. So full standard lot, say right here, comes all the way down, close out 0.75 to only have 0.25 left. Runs up into here, taking another 0.75 or another standard lot on the trade right here, probably 0.75 to make it a full standard lot trade. 0.25 up here, 0.75 here. So, you know, and that obviously depends all on your risk management. But that's pretty much what I've been doing. That's what I'm going to be targeting all year, guys. Trying to catch big moves, take some profits, hit the golden zone for the retracement, and continue to sell.